Hi, I'm Rob,
And I'm Joe.
and we're Trading Brothers. Well, we created this YouTube video because we've been trading, and a lot of people have a lot of questions. We've been pretty successful at it. We trade options, basically, credit spreads. We don't really do too much debit spreads or anything like that. But if you want to know what a credit spread is, you could probably Google it. What our main purpose of this video is to show that, basically anybody, if they put their mind to it and they put the effort into it, they could be successful at trading. A couple years ago, we just started out, and today we're doing very well for ourselves, both of
The
us.
the only limitation is your own mind. Whatever you see yourself doing, you can do. It's not like an employer pays you a certain amount of money or your boss says you have to come into work this day, but you will get paid for what you do.
That's right. You get in, or you get what you put in. So that's basically what it boils down to. The reason that we've been kind of successful at this is because we do it a little bit differently than other people. A lot of people that sell spreads, they utilize volatility, and volatility is like the sea. It's either flat and it's calm, or sometimes it likes to mix things up and get real violent. We like to trade around that, basically. So if we're selling credit spreads on an equity, we're not going to do it during earnings of that equity. And we're not going to do it around a Fed meeting or anything like that. We like to wait till after the news comes out. Once the news comes out, then the volatility drops. So when we're selling premium, that's basically what we're waiting for, is something like that to happen and an opportunity to show itself. So we don't trade every day. We might trade once a week, once every 2 weeks, once a month. It depends if
On
we
what's
see
going on with the market.
and if we see the opportunity.
And we don't just trade individual stocks, but we can trade the market as a whole through the RUT or the SPX or another index. So you don't have to dip into individual stocks. If you see the stock market as a whole, you see a trend, you move around it, you dance, you sell premium, and you make your money.
Exactly. So, and we typically don't sell credit spreads on things that aren't liquid. So you have liquid stocks like Apple, Google, Tesla's been pretty liquid lately, as that's been going up. You've got other highly liquid stocks, and also the SPX. There's a few reasons why we trade the SPX. It's because it's what's called European style. You got American style options, where someone could take possession and own the option that you sold at any time. But with a European style option, they can only take possession of the option at expiration. So, and they also, on the SPX and some of the indices, they have tax purposes,
60-40.
60-40 split. So 60, no matter if you held it for a day or you hold it for a year, you sell out of it, out of the spread, you're only getting taxed at
60% long term, 40% short term.
Exactly. And here's the basic reason why we do credit spreads. Let me see here.
Well, and I got it.
All right, great.
There we go.
Say you got this quarter, right? Quarter is going to represent an equity or an index or whatever. It's going to represent just that. Now, with this, it's harder for us, as being normal people. We don't have fiber optic lines running to our computers and giving us split second data reads and all that. With this type of strategy, you don't really need that. You could trade off of your laptop. You could trade off of the computer at the library. You could trade just about anywhere.
Trade off your mobile app.
Right. So as us, we're not really picking direction. We're trying to stay away from it. If I drop this quarter, I can't tell you exactly where it's going to land, how far away it's going to land, or whatever. If I drop this quarter here, it could go here this time. I drop this quarter here, it could go over there that time. Basically, that's the market for you. It can go anywhere. Even if you're 100% right, even if you think you know
True.
exactly what's going to happen, it can go against
Sometimes.
you. Right.
That's why when it does go against you, you have to make good judgment calls.
Definitely. But with us selling premium, we're not trying to figure out if a stock is going to go up or down. We're just trying to figure out where it's not going to go. And that's where we feel that we do a lot better at doing that than actually picking direction, because there's so many variables out there. So if I drop this quarter, I can't say if it's going to land over here or over here, but I can pretty much say that it's not going to land down the street. And that's pretty much what you want to do. So when we're selling options, we sell short term. You know, we're in for the week. We don't really do a whole lot of monthlies because there's so many things that could happen. You could have something going on overseas. Tsunami hit somewhere and take out Japan. You never know. You never know. So that's why we like to do it on weeklies. We know we're completely liquid at the end of the week, and that's pretty much how we like to trade, and it works.
And it's effective. Really effective.
It's been working a lot. I mean,
best trading I've ever done. I've done strangles, I've done long calls, long puts, and every time it just eats up premium.
You buy an option, you want to go long on an option. You buy an option, you're right, earnings come out, it beats, but the option premium fades anyway. And why that happens is because there's no catalyst anymore. There's nothing that's going to happen that's going to drive that stock up even more. All you have is momentum. So there's a volatility crunch. When you sell an option and it has volatility in the option and time value, that movement's being priced in there. And then once that catalyst happens, that volatility disappears. It starts fading away rather rapidly. So that's why we like to be on the selling end. Not only that, speaking in terms of being, speaking in numbers here, 90-some percent.
98%.
98%.
Specifically.
Well, 98% of options expire worthless. And I would rather be an option seller than an option buyer. That's pretty much our whole approach to the market. And what we're going to be doing in this YouTube videos is showing actual trades that we do every week
and posting them so people can get a better idea of how to do this, and they can really know how to do it. Yeah, you can read all the books you want. You can I've read them. I mean, I've read tons and tons of books, and it doesn't really break it down to the keys that you're going to actually need to know to be successful at trading. It takes a lot of discipline. It takes a lot of determination, and it's not really for somebody who just wants to play around. Or someone that doesn't really have the courage and the persistence. You got to have persistence. I've lost some money before here and there a little bit, but you know what? You always make more than what you lose, and you're good to go. Everything's a learning lesson. Everything's a lesson. Basically, if say you buy a stock, you're faced with two problems right off the bat. You're faced with, when am I going to get in, and when am I going to get out? With this, it eliminates half of that. How many times have you bought a stock and it's rallied and you've held it and it keeps going up? That's great. But how many times have you held it and have it fade back down and you didn't get out at the top? That's something that you have to know. You have to have an entry and exit strategy when you're dealing with stocks. When you're dealing with options, you have limitations. You can sell out of your premium when it hits a certain mark and you've made enough money, but either way it's gonna fall in the money or it's not. It's gonna you have an expiration, and as time value goes on, you really, if your trade is working in your favor, you don't have to exit the trade. So that takes half of the trading problem out of the equation. I think that's pretty much about it. Alright, that's pretty much it for this YouTube video. And this is Trading Brothers. And we'll see you next time on our next video. For sure. Thanks for watching.